Nigerian Exchange Limited on Wednesday maintained the positive performance as the market capitalization was up by 71 billion, equivalent to 2.9%, to close at 25.18 trillion, as against 24.47 trillion posted on Tuesday. Also, the all-share index gained 1,303.04 points to close at 46,232.37 basis points compared to 44,929.33 points on Tuesday. This made it the highest since October 17. As a result of this, the year-to-date return rose to 8.23%. The stocks that drove the strong performance are Dangote Cement and Bourse Cement. In all, the total volume of shares traded increased by 52% to 187.81 million shares worth 1.84 billion naira, traded in 3,458 deals. This was in contrast to 126.56 million shares valued at 3.85 billion transacted in 3,386 deals the previous day. Joining us to look at these numbers and more, we have Christian Isaac Anyalas, security and investment analyst. Good morning.
Good morning.
Yes, let's look at the market yesterday. The market was still up for the third straight day. It was up for the third straight day this week. What do you make of this?
Yeah, I think the market and the investors in the market were making a statement, and that statement is in support of the recent.
Hello. Well, I think we've lost him for a minute, but before he got cut off, he was explaining how the market is in support of the recent hike in interest rates by the central bank to increase from 15.5% by 100 basis points to 16.5. Please continue, sir.
Yeah, I said the investors were making a statement, or the market was reacting, to government policies, the issue of the policy, the intention of government to redesign the currency, and of course the interest rate that was hiked from 15.5% by 100%, 100 basis points to 16.5. What the market is saying is that it appeared investors are deducing from what has happened that going forward that inflationary trend will be cushioned by existing government policies. That reaction you saw yesterday for the third consecutive day, it suggests that government policy, the CBN policy to raise the rate, and the CBN policy to also redesign the currency are going to be useful to the economy. And that is why you saw the market moving in that direction. If the investors, if the market was not in harmony with those positions of the government, the reverse would have been the case.
But one thing we saw yesterday was that the market went up really high by 2.9%. But the market capitalization was around 71 billion. Why was this? Hello? Are you with me?
Let me hear you. I can't hear you.
I said one thing we saw yesterday was that the percentage was 2.9. I think that has been one of the highest since October 17. What was largely responsible for this? Did you hear me? Hello? I said, Mr. Christian, if you can hear me, I was explaining that the market went up 2.9% yesterday. Was there a special reason for this? I think we've lost him there. He was explaining to us about how.
I can hear you now.
Okay. Let's have it. I was explaining what was responsible for the 2.9 yesterday, because we've always had a bullish, a positive market, but yesterday we had a 2.9% market. What was responsible for this?
Yeah, it still goes back to the fact that the policies of government, investors have confidence in these policies. That is what is being reflected here. If there's no confidence,
I think
support capital market going forward,
all right,
the reverse would have been the case. That is what's responsible at level of growth in the indices that you saw yesterday.
Well, we saw two competitors, and that's Bourse Cement and Dangote Cement. They were both they led the gainers yesterday. Is there a specific reason for this?
Yeah, you see, share prices, increases in share prices are usually reflections of certain ongoings within a sector or within a business. This time of the year, people are moving. Some people want to complete their buildings, so it is a reflection of the volume of sales that is going on in those companies now. The demand for their product, that is what you are seeing. It's also suggests that people are moving away to some extent from consumption spending into investment spending by way of acquisition of own mortgages or personal buildings. It is also we can also attribute it to the fact that the year is coming to an end, and some of the government construction projects that they are trying to the government is doing everything to complete certain projects, certain roads, for the fiscal year 2002, and there is increase in the demand for the products of Dangote cement and Bourse cement. Otherwise, you will not have seen that level of activity. If you even go further to support the government, what we said about government policies, you can see that the banking stocks did 1.82%, the banking index, and you saw that the insurance index did 3.66%. And when you have rates adjusted, upwardly, they benefit more.
Hello. He was making some really interesting points there, telling us that as the market looks towards the Christmas period, the market is appreciating. I don't, Mr. Christian, are you still with us?
Can hear you.
Yeah, please continue on that thought.
Yeah, I was saying that you can see that the banking indices, the banking sector and the insurance sector, the index appreciated by 1.82% and 3.66% respectively. So that goes to show you that the banking system, the financial system, will benefit from the hike interest rate, just like the insurance company and the bank. So that is what is responsible for that move there. If you go back to the index for the industrial goods, you can see it rose to a whopping 9.25%. So
I think we lost him once.
They are making sales.
Yes.
Their turnover within this period will be high, even as government and individuals try to complete certain projects that requires the utilization of the products of Bourse cement and Dangote.
All right.
As it were.
Yes. Now let's look at today. What are some of the things that we should be expecting from the market today?
Well, I wouldn't go straight to tell you that we should expect a bullish run, because if you look at the market statistics that we have, you can see that the value of the market, dropped by 52.17%. Can you hear me?
Yes, I can hear you. I'm with you. Please continue.
Yeah. You can see that the volume, the value of the transactions for yesterday dropped by 52.17%. So that tells you that amid investor confidence in policy directives, that the strength of the market is narrowing because of liquidity pressures.
Okay.
So we can't just say, but it is possible that since the index gained like 2.29% and market capitalization also grew by 2.29% yesterday, it might not be very easy for them to go negative, but we might see a market that is coming down, but it will not be in the negative corridor.
That's a very nice one, and that's a very good place to hold the conversation.
Hello?
Today. I said that's a very good. Hello, can you hear me? We can hear you.
Yeah, I can hear you now.
I said that's a very nice place to hold the conversation for today. Thank you very much, Christian Isaac Anyalasi, for your continuous erudition. Thank you very much.
Thank you so much for having me.
You're welcome. Still to come.
Thank you.
24 days earlier than the initial December 15 date originally scheduled for the circulation by the Central Bank of Nigeria, the much anticipated new Naira note has been unveiled. What next for the Naira? We shall be looking at when we come back from this break.